What's going on, guys? Bexio back, and today we had a brand new video on Plug Power. This stock has just been beaten into the dirt recently, along with the rest of the stock market. So we already know these interest rates, all of this stuff going on in the stock market, pushing it down, fear, uncertainty in the market, and market hates that the most. And everything has been down. So it's hard to go after Plug if it's down quite a bit because we all already know Plug is a volatile stock. It's one that is going to go up and down very rapidly. And depending on the circumstances like we're in now, an area with a lot of uncertainty, that just means it goes down much more harsher than other stocks typically can do. But nothing is immune to this sell-off. Before we jump into that, if you're not subscribed, make sure to go over to that sub button and smash the subscribe button because we're on the road to 1,000 subscribers. But we can just take a quick look at Plug Power's chart here and seeing how it has broken below this red channel here, which could be a problem. Obviously, we don't have basically anything underneath this to point to support or resistance. Maybe like very quickly right here, like $19. So another dollar down before we can see something. Could it be like we saw this last time it went into the channel, dip down to $18.47 before rallying back up and interacting quite a bit more with it before obviously breaking out. So if we get something similar, it could play out this similar ways. But I think with so much of the macro uncertainty, with interest rate hikes, with unknowns from the Fed, obviously Plug is already volatile. It's a growth company that has plans to be big in the future. So that already adds to its volatility. And if it's for its chart here, breaking below this, obviously not great at all. So the first thing we want to do is get back into this range, $23.63 to $28 somewhere. Get back in there, or we'll see where we get a support or what happens with it below this range. But right now it is pretty much in no man's land. There's nothing going on. I mean, we can go back kind of to $19 is the only thing, and then after that it just starts to get way down there before you start to find some sort of support or resistance or anything really going on. The majority of stocks here are just plummeting. It is just red all across the entirety of the market. So nothing is immune about this. Small cap stocks, these growth companies with the potential big growth, are the ones getting hit the hardest. And even Apple, I mean, down 2%. Apple is down 2.1%. That is massive numbers for Apple moving. Even indexes are down 1%. So it obviously there's a lot going on. There's a lot of fear in the market. There's a lot of people who don't know what's going on, scared of the interest rate hikes, scared of what the Fed could do, continuing this tightening and accelerating tightening, selling their assets. There's so many things that is pushing uncertainty into the market, which is obviously going to cause volatility. In this case, it's downward volatility. But as always, the market is probably overreacting to all the news that it always hears. It always overreacts to everything, whether it's positive news or negative news. Right now, a lot of negative news, and the market is probably overreacting to how bad things are. It's just how it tends to be. And obviously that would mean that now would be a great buying opportunity for a lot of things. But when looking at things like Plug, stocks like Plug and growth companies, these are companies that you shouldn't build your backbone of your portfolio on. It should be built on VTI, VOO, these index funds, and then giant blue chip mega cap companies like Apple, Microsoft, Amazon, these guys who are the trillion-dollar companies. I think you should build that up before you venture out into something like Plug or small cap companies with growth potential, because you don't want to be taking on all of that risk and volatility with all of your portfolio, really. We have some pretty good bullish news for Plug. They had their sales guidance. It was very, very good. So you see right here, Plug Power, they set their 2022 goal, this year's sales goal. They raised it from 900 million to 925 million dollars. So they're really fast tracking that, going to $1 billion in revenue. That was supposed to happen by 2024. It seems like we're getting it much, much faster. Here, obviously, it's only $75 million away now from $1 billion. So we might actually hit that billion before 2024, which would be really good. And then even Wall Street's estimates are about $891 million. So they're estimating themselves to be over that. So they're probably inside, know what's going on, know that sales are great, growth is going good, and they're continuing to innovate and move forward. And we know the stock is volatile. It moved down on this news, but I don't think you can say it moved down because of this news. It's moving down because of what's going on in the market and the macros. The Fed's doing a lot more than just what's going on in Plug as a company. But obviously, this even says shares tend to be volatile. The stock moved 8% up or down on average after the company's earnings reports for the past 2 years. This is just something you have to accept with a growth company that's growing into its potential and going towards its goals. It's just going to be volatile. If it reports under numbers, it's going to go down big. If it reports over numbers, it's going to go up big. Beating expectations is good. That's going to go up big. If it doesn't beat expectations, that's really bad. It's going to go down big. It's just going to be super volatile. You have to look into how they're acting, what their insiders are doing, if the company's actually growing, and if it's going in the right direction, which I think Plug Power is doing very, very much so. And this right here talks about why Plug Power is a good long-term investment. And there's a few reasons why it's a good investment. So first up, it has its first movers advantage in multiple aspects of this hydrogen ecosystem. And then on top of that, governments are looking to implement programs that will promote the use of hydrogen. So it's already a first mover advantage, just like Tesla had with EVs. Plug has that with hydrogen. Will it be the massive market that Tesla has, like $1 trillion company? Probably not, at least for a long, long time. But it does have that first mover's advantage. That market majority share is Plug Power. They've just been in the market for the longest. They have the biggest share. Moving forward, that's going to help them generate revenue. And then governments doing programs to implement hydrogen. We've already seen that tons of governments across the world are trying to ban gas-powered cars by like 2035 or something like that. So there's already down the line looking at getting rid of gas-powered stuff, which hydrogen could come in and replace that a lot easier than I think EVs could, because we're already seeing right now there's shortage in materials to make batteries for Teslas. And imagine if every single person in the world needed those batteries. It'd be very hard to get that material to make the batteries, and then very expensive if everyone only option was an EV. And you see Plug continuing to acquire companies. They acquired the Frames Group last month. So European-based engineering, design, and manufacturing company. So going to help them on this European front, kind of getting in that kind of sector there. And we can see as well legislation, even in the US, is there's stuff going for hydrogen legislation. We see $8 billion to launch at least 4 clean hydrogen hubs across the United States. So we see the going and adoption kind of move towards hydrogen to get away from gas. Doesn't matter if you agree with it or not. There's steps going on to happen with it. Plug stands the best chance to benefit from that. Even California itself is building 100 hydrogen fueling stations in the state, and new pro-hydrogen measures are being considered by the EU. So you see governments across the globe are looking into hydrogen, thinking of what they can do with it, and kind of pushing that innovation by subsidizing it and giving it money to build the infrastructure out. That's where we're at right now, is getting infrastructure. That's what's needed to push this kind of forward. We see California getting involved in it, the United States getting involved in it, the EU getting involved in it, just everyone kind of moving towards that. And the CEO had some talks. He is very excited about Plug's emerging business and Plug as a whole, talking about green hydrogen would become quite profitable for Plug Power, and that their margins are going to go from 0% next year to 30% in 2024. So they're losing money right now, so that's why 0% next year would be an upgrade. So that would mean they would stop losing money. And then by 2024, they want to be profitable, making 30% margins, which is pretty good margins. And they expect to generate meaningful profits and positive cash flow by the end of 2023, if not sooner. So the big thing that I would hold Plug accountable for is 2024. They have to be profitable. Otherwise, it calls into question a lot of other things of how they're actually growing and whatnot. But if they get profitable before that, that's just even better news. If they can hit it by next year or later this year, that would be absolutely massive for Plug. They'd be able to, say that they're growing at insane rates, that they grew so fast that they became profitable before they were even projecting to be profitable. And this is kind of the author of this article's kind of own opinions. But I agree with them because he says Plug Power's new deals and partnerships, along with government's enhanced support for hydrogen, will greatly improve its financial results over the long term. Its new business, it's already poised to grow rapidly. And then, given these points, he continues to recommend that long-term investors buy Plug stock. Completely agree. I think Plug is an amazing company for the long term, but it's going to be volatile. It's going to swing up and down violently, which is why I don't think you should make it the backbone of your portfolio unless you want to see your portfolio move up and down thousands of dollars or tens of thousands of dollars, how much money you have invested in it a day, which could be nothing. Some people might not want to stomach that kind of volatility, but all of those points, massive. The governments, they are getting behind hydrogen, helping it out. They are obviously putting in rules and laws about kind of hydrogen, pushing it forward on getting rid of gas. And on top of that, even in this environment of interest rate hikes and that uncertainty and the fear around that, it doesn't necessarily go towards Plug. Obviously, the chart shows it. Plug going down shows the fears going into it. But Plug as a company can weather this storm. They have $3 billion of cash on hand that they can use to sustain themselves while they get to profitability. So in the short term, these technicals and fear of the markets can take over. We're seeing that now. But in the long term, the fundamentals of any company takes over. And if they have the money to survive this kind of interest rate area, then they can move forward, become profitable, hit their growth rates, and become a giant company. And I think that's what Plug's going to set out to do. That's going to do it for this video. As always, guys, I'm going to smash the like button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.